let's get more on Li Fung's results. And this morning we welcome William Fung, who's the managing director at Li Fung and also ranked as the world's 430th richest person according to Forbes magazine. A good morning to you, William. Thank you so much for joining us here in the studio. So let's talk about these high expectations. Yeah, missed again. Let me just talk to you about sales going forward. I mean, it was a tough year in 2009. You're looking at $20 billion, is that right, in sales for this year?
Well, Susan, good morning. First of all, I guess it just shows that Li Fung is better at managing his business than expectations in the market. Yes, we do have very high goals. We have not changed our goals since the financial tsunami. We're in the last year of our current three-year plan, which ends this year in 2010. Despite the financial tsunami and the resultant fallout in the consumer goods spending area, we still are hoping that we could make or get as close as possible to our target.
Now, it was about cost cutting in 2009. We saw that 30% rise in profit because you're trying to trim down your costs. When is it going to be about sales? When is the profit going to reflect sales moving upwards?
Well, sales in 2009 was very hard hit, frankly. I think 2009 was really one of the toughest years in terms of our customers' own business concern. You know that in the financial fallout, after the financial tsunami, the sector that was really hardest hit was consumer spending. And the World Bank, for example, says that in 2009, world trade declined by 14.4%. We also faced several bankruptcies amongst our customer base. But having said that, we really worked very hard to ensure that even in that environment, our costs were in line with the market. And in fact, we strengthened our cost base in anticipation for really the turnaround, which we're actually seeing now.
Yeah, and you say that there's no risk of a double dip, even though we keep seeing housing still depressed in the U.S., manufacturing not as strong as some economists have predicted. In fact, I talked to a Harvard professor and well-known economist, Martin Feldstein, who says there is risk of double dip.
No, I think there is risk, but I think the risk is small. What we see in the market now is that, yes, consumer spending is not a very robust rebound. However, having said that, we don't see a double dip either. Don't forget, consumer spending is quite resilient. In previous years and previous recessions, not as serious as this one, consumer spending, especially in America, just kept going.
William, you spent some of the financial crisis, of course, making acquisitions. Valuations are pretty depressed, so you got some potential bargains. Asset prices have risen a lot, but then again, as you say, the economy's back on track. Are you done with acquisitions, or can you make some more?
No, well, actually, acquisitions part of our strategy has always been in the last 10 years. However, having said that, we actually saw 2009 as a pretty good year to consolidate your business and expand. I think one of the things that we saw were opportunities in this market. And in fact, during 2009, we made several very interesting and important acquisitions, as well as, actually, more importantly, perhaps, several big outsourcing deals from customers who used to do their own sourcing and have now entrusted that to Li Fung.
Are there any parts of your business which are lacking at the moment, where you see we've got to fill in that gap?
Well, I think that there always has been. However, our impetus in going into finishing our three-year plan have been really to strengthen our onshore business in America, our onshore business in Europe, which is a little behind the American in terms of the Americas in terms of the time we started, and also in new product areas like health and beauty, which is a new product area for Li Fung.
Yeah, recently you bought Visage in the UK, and in fact, I think at your press conference yesterday after the earnings, either you or Bruce were talking about buying into healthcare or health and beauty, and then footwear as well. So,
yeah, footwear is another product area that we are focusing some attention on.
Yeah. Well, why these three particular segments?
Well, these
you already
would
have
be
enough
areas.
of the other parts?
No, these are areas of first of all, like health and beauty is a new area for Li Fung. We're very strong, we think, in the apparel and garment area. We're very strong in general hard goods, things like toys, and home products. But footwear is one of those in the hard goods that we want to strengthen further. But a big area for us would be health and beauty.
Yeah, so $500 million in cash available for acquisitions. When do you think we might see the next deal, next acquisition?
Well, frankly, we're looking at everything all the time. And, we've been announcing the acquisitions as they occur, especially the bigger ones, and we're very optimistic going into 2010.
Yeah.
Despite, as the analysts were probably more optimistic than the reality. But having said that, I think 2009 really set the base for us to have a sterling year in 2010.
Okay, well, William, let me get some thoughts on the currency debate. Obviously, it's dominating headlines. U.S. lawmakers ratcheting up their rhetoric on what China should be doing with their currency policy. Now, Li Fung, actually sources 54% of your goods on the mainland. Yes. Do you actually want to see a stronger yuan? It actually helps you if the yuan stays stable, doesn't it?
Well, no, not really, because if you think about it, a proper valuation of the yuan is good for the whole world in terms of economic recovery. We frankly don't know what that is. All we know is that the Chinese government's policy and their leaders' policy is to make sure that the appreciation is orderly. And it won't be, I don't think, a dramatic jump. Having said that, all our purchases are in US dollars, and our sales are in US dollars. So obviously the whole arena of the currency movement, especially the US dollar, versus not just the RMB, but other currencies of primary importance to us. But we actually see a period of a bit of confusion right now.
William, only just over half of your sourcing is out of China at the moment, 54%.
That's right.
You see it dropping below 50% anytime soon?
Well, China has been adjusting its export industries. Well-known fact is that China is trying to move some of its more labor-intensive export processing industries from the coastal area more to the hinterland. And I think that adjustment period will probably create some confusion and turmoil in the Chinese export market in the next 5 years until it settles down. And the factories are actually, some of the factories are actually relocated to where the population is. As you know, in the past 20 years since the opening of China, China has a very unique system of bringing the workers to the factories on the coastal area. But now that China has built up some really first-class infrastructure to link up the hinterland, the move of factories back to where the labor is actually very logical. But because of this relocation, there'll be some turmoil. But Li Fung is very well positioned for that to the extent that we work in 40-something countries. So in the meantime, countries like Vietnam, Cambodia, Bangladesh is going to gain some market share while China is adjusting. But China fundamentally is still very strong, of course.
All right. Well, William, good luck for 2010. Thank you for dropping by this morning. That's William Fung, Managing Director at Li Fung.